Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders. And I want to just say hello to everybody. We kind of had a little bit of a hiatus there, a lot of stuff going on. So been about a week since we've been together. Blane, great to see you, my man, and really enjoy having you here. I have a lot of questions for you today, so I hope you're ready.
Yeah, absolutely. Well, yeah, super excited to be back. As you said, it's been, a little over a week since we were able to, connect and do one of these eye openers. So really excited to be back here this Wednesday. That we had some other things going on the schedule, some other events happening that we weren't able to get together. But obviously, since the last time we did one of these, a lot's been happening in the market. So glad to be here
Yeah,
to break it down and more importantly, try and interpret from the charts, of what has happened and probably where we're going. So
Yeah, it's I guess the market didn't just wait for us to get back into the eye opener sessions. They were out there doing stuff and changing things and all that. So I guess that's the way it really works. But definitely, like you said, a lot going on. I think we were last together. The rate cut was like the big thing everybody was obsessed about. And I wouldn't say it was a nothing burger, but if you didn't know that was going on and you just looked at the charts, it's wash, rinse, repeat. I mean, rallies up, little pullback, your profit taking, a little rotation, and then back to the climb again. We just are on this now. I say that as today things be changing a little bit, hard to tell. A bunch of stuff going on, but it doesn't look like it's so far gone that we're breaking the pattern completely. But I want to hear what you have to say, and most importantly, what I want to hear is kind of where you're finding the trades, because this is a really interesting market. It's not a layup to go out there and find these winners. So counting on you to point us in the right direction, Blane.
yeah, absolutely. Well, that's exactly why I'm here. And John, you're right. Last time we were together, that's just what everybody was talking about. It's turn on any financial media source of your choosing, whatever your preference is, wherever you're reading. Everybody was talking about rate cuts, and arguably, I think the market's kind of the mind's eye of the market is still pretty squarely focused on rate cuts and what's going to come. As you said, it wasn't a super eventful Fed day when we finally got that last week. The market had priced in, you rarely get a 100% probability or certainty of anything in the markets. But heading into that Fed meeting, we had a 100% probability, according to the Fed, the CME Fed Watch tool, talking about what was expected of that meeting. It was pricing in a 100% probability of a rate cut at that meeting. So the market had already priced that in, had rallied a lot in advance of that because the market was almost guaranteeing that was going to happen. The most important thing from that day is that the market wasn't surprised. That's the biggest thing the market does not like, is being surprised. Getting taken blindsided out of nowhere. So we got the rate cut, kind of put that feather in the cap of the market. So, that was, cheered by investors. We got a little bit of a boost from there, had several new all-time highs across the board. I'm actually going to go ahead and just take over the screen share here too, John, so we can start
You
hopping
have
into
your way
it.
with it.
Um, but, of course, we had, multiple new all-time highs across pretty much all of the major indexes, including the Russell 2000. Finally, the Russell finally broke out to a new all-time high as well after several years. So again, we got the confirmation that rate cut, got that behind us. And, now the markets are focused on what's coming next. They're processing incoming data. There's a big report coming up just a couple days on Friday morning. Of course, we're going to get the PCE inflation report, because there are still some risks out there. We still have, there's data, indicating we have declining, or rather weakening labor market, but also, inflation is remaining quite sticky. So those are two things are really still pretty much in contention with one another. So kind of creating a tricky spot for the Fed. The market's still anticipating we're going to have several rate cuts again through the remaining two meetings of the year, but that's what the market's squarely focused on right now. But getting back to what the charts are telling us, heading into that Fed meeting, like we said, John, the market had rallied quite a bit, in anticipation of that rate cut. We had been stuck in this consolidation period, barely just grinding out a new high by a point or two here or there, but really kind of stuck, trading in this range for much of August right here. And we finally broke out to the upside heading into that Fed meeting. But, of course, with that, substantial move higher, we finally broke above that 6,500, 6,525 level that had been, pretty solid resistance for the market right along in here. Once we finally broke above it, stocks kind of started just levitating higher. They continued to trade higher on the same news day after day after day, essentially. And that fever kind of broke finally on Tuesday, just yesterday. We saw on Monday, the index continued to add on to their gains. Some of that was, excuse me, some company-specific news with Apple and Nvidia, of course, two of the most heavily weighted stocks in the market. So, of course, going to have an outsized effect on the indexes. But that kind of broke finally yesterday. And we had, in some of our other calls, Helene and I have been pointing this out when we've been live, is that, markets were essentially trading, above the upper Keltner channel and, that short-term overbought territory for almost 2 weeks. So, they were certainly, the market was certainly primed and ready to have a bit of a, pullback, bit of a retracement, allowing some consolidation of these gains. And, we've been telling folks, unfortunately, I wasn't able to sit here and join you for one of the eye openers to talk about it to our audience here. But, saying that, this pullback, we were fully anticipating this. We saw yesterday, open, rally to another new high right at the open and almost immediately sold off, closed near the lows of the session. Today, you can see the index has also fallen. We're now sitting near the lows of the session today on the index level. So I think we're starting to see that pullback start to happen. I'm not saying that, I'm anticipating, a very substantial pullback, talking about a 5 or 10% decline, nothing like that. It's not what I foresee. But, just, allowing stocks to come in a little bit. They traded, almost, straight up going, rallying for, again, almost 8, 9 days in a row, essentially. And so, it was due for, stocks to come in a little bit. So probably, John, what we're looking at least where I would be keeping an eye on for, where I would see stocks probably find some support, is that previous resistance level that we're looking at, through much of August and really kind of the first week of September as well, somewhere right around that 65.25 range. That was a pretty solid level of resistance previously. And as we know, as technicians, people that watch charts, we know that previous points of resistance, once you break through them, they then flip into levels of support. So, you could see, the S&P trade back down, to roughly this middle Keltner channel, possibly even slightly below it, again to that, 65.25 level before it finds some support. I still think that the long-term trend, obviously, looking at this chart here, is, very much intact. Seeing some really encouraging things. I mean, we're still making a series of higher highs and higher lows right now, even with the pullback in the last 2 days. So, some really encouraging stuff in the charts. But, all that said, stocks were due for a bit of a cooling off period. And I think that's what we're getting right now.
Yeah, and if you look at the chart right now, look back to July, right? And you just see this kind of steady climb, a lot of time above the top on the channel there. And then you see August where you climb and pull back leading into September. Now September looks a lot like July, right? Very similar there. And again, this is wash, rinse, repeat. I feel like we're headed for the same kind of churn. And that it presents a challenge because it can be unsettling. If you're looking at longer term positions, it can shake you out. It can rattle you and get you nervous. It can damage confidence, make it harder to enter those trades, to exit those trades with the rules that you set for yourself. It's just something to be aware of as you head into. Know that that's probably what this looks like in terms of like the panic button. My guess from everything that I'm seeing, and I'm going to go out on a little bit of a limb here, and not much of a risk, so don't give me too much credit. But when this thing reverses, it's going to go hard, and it's going to go hard fast. And it could be triggered by some big global event. It could be triggered by some news or something like that. But until then, we're going to see it in this very consistent range, that's upward bull range that we've seen for a while. It's going to have to break out of that. And when it does, it's going to move quick. For now, we know we've got a pretty good idea of what to expect. No guarantees, of course, but it is a very habitual kind of thing. The market does what it likes to do. It stays in its little rhythm for a while, until it gets a good reason not to. So, but that said, even in August, I remember, that's not that long ago. It was tricky to kind of determine where to drill down and look for trade. So I guess that's the next question for you, Blaine. We want to really jump into that. And for the folks in the room with us, jump in, ask questions, argue with us, whatever it is that you need to do. Throw a message up in the chat, and we'll get to it. We're glad to have you guys here. Really appreciate you taking the time to log in with us.
Yeah,
Blaine, yeah, give
absolutely.
us an idea of what else you're thinking here.
Yeah, sure thing. Yeah, I mean, just to speak to what you're talking about there too, John. Again, I still think very firmly that we're still in, the type of market scenario where we're seeing, a two-step forward, one step back type of trading, and I think we're just taking that one step back right now. It's
Mhm.
all, normal, very healthy, parts of a very healthy bull market. Seeing, these kind of expansionary moves upward and then pulling back a little bit. Having a little bit of profit taking happen, allowing a little better entry point for, newer buyers to come into the market, to ultimately push things higher. Again, the trend is still very firmly intact. We're just marginally off of all-time highs. So don't want to lose sight of that. Even though we pulled back the last 2 days, we're talking about a bit of a cooling off period. Again, we're only marginally off of the all-time highs. We were sitting there just 2 days ago. We're still trading above 6,600. So the market is still in very good shape. And, again, absent that major negative catalyst, there's still a lot going right for stock prices. We still see rate cuts on the horizon. Earnings growth has been really solid. We do have some weakening economic data, but overall, consumer spending is hanging in there. We're not seeing the unemployment rate, spike to a very concerning level, although it has, ticked up somewhat. So, there's still a lot of things going right for stock prices. Just equity prices were due for just a bit of a consolidation cooling off. And that's all we're expecting right here as of now. So as you're talking though, John, even though the market had found itself, pretty squarely in short-term overbought territory, and broadly the indexes were signaling that, there still are opportunities out there in the market, and that's why we have our technical systems that we rely on to help us find these. And so I found one today, looked really, really strong. This is a stock that we've traded, I know our team's traded several times this year. It's been a really strong performer, particularly coming out of those April lows, but it's RTX or Raytheon Technologies. And several of our, technical analysis systems and, excuse me, some of our, trade finding systems actually spotted this one this morning. And you can see probably why. It's a really encouraging chart right here for Raytheon. You can see a really strong trend line buy signal right here. It's a 21-day EMA. It's our red lines trading above our green line right here. It's a longer-term 63-day EMA. Again, you can see when the buy signal actually broke out right here. Sorry, I think I have to sneeze. I apologize.
No worries. So definitely interesting note that you picked up on Raytheon. So one of the things that I've been looking at is that so much is going into AI right now that the IT infrastructure side of things is really seeing a boost because AI is one thing, but you've got to have the foundation to support it. You got to have the infrastructure there, the networks, the all the things connected, all the wires and the ones and zeros, pointed in the right direction. I'm apologize to all the IT people who are just vomiting as I oversimplify this, but you got to have the equipment there to support all that. And we're seeing these guys kind of have a little bit of a boon, they're getting a boost as this is everybody's trying to keep up with the AI craze.
Yes, absolutely. And yeah, sorry if people ever wondered if we were actually doing these calls live, that should be proof right there that we're doing these live.
I
So
can't believe
apologize for
the
that.
AI I can't believe the AI bot actually faked you sneezing as you
I
did
know,
that,
yeah, it's unbelievable what these AI bots can do nowadays.
Right?
But
Yeah, no.
anyways, you're exactly right though, John. AI it's starting to really actually permeate a lot of different industries now, and Raytheon is a great example of that. They're starting to implement this, into what they're delivering for their consumers. Of course, major player in the aerospace and defense industry right here, probably one of the biggest. Actually, it's publicly traded here in our markets. Major player here in that space. And just looking further into the charts here too, you can see over the roughly the past almost 2 months, really, the stock has been stuck in this kind of range between, call it 151 and about 160 per share. Just kind of just bouncing up and down, just kind of trading sideways, but not being able to really break out of that range. It's been kind of roughly riding, about 157 a share, 156 a share for, just about 2 months now. But in the last several days of trading, we're now finally seeing RTX break out. It's having a kind of a bit of a fresh breath of life breathed into the stock. It's finally breaking this one out to the upside. And after seeing a consolidation period where the stocks was traded sideways for this long of period of time, and now seeing it finally break out to the upside, and actually just today now setting a new all-time high in the stock, and it's on pace to set a new all-time closing high as well. This is an incredibly bullish sign here for Raytheon Technology. So despite, again, the overall index is looking fairly overbought still and expecting that they're going to pull back and retrace a little bit further from where they are today, RTX, on the other hand, it's experiencing a fresh breakout. So probably some of that money, you're seeing some rotation happen in these markets. You're seeing profit taking out of some of the, sectors and industries that have really rallied of late, probably largely on the rate cutting news. You're probably seeing some of that money rotate into the stock right here. I think that's one of the key explanations of why it's rallied for, 4 straight days right here, particularly the last 2 days as the market is sold off, pushing the stock again up to those new highs. So a really, really encouraging fresh breakout right here for a stock that's already on a great trend. And furthermore, it's still offering you a really attractive entry point to get into the trade. There was a brief blip earlier today where it traded above the upper Keltner channel. It looks like it's rallying right now. So I want to go ahead and pull up our trade before it pops above that upper Keltner channel and continues trading higher. But it's for RTX, and looking at October 17th right here. That's the option expiration date I was looking at for how I would trade this one, and specifically the 155 strike call right here. So you can see it's currently trading at 9.15 points per contract. It has ticked up just a bit actually since I found this trade earlier. It was actually just a touch below 9 points. So it's been rallying while we were on this call, John. But I'm going to go ahead and actually look to take this one right here. This is a really strong looking breakout. And, this is more of a shorter term, kind of a swing trade type hold, how I'd look to trade this one. But you can see there's, a lot of open interest, a lot of contracts being traded with this option right now. So I'm actually going to go ahead. It looks like it just touched down to 9.08. So I'm going to put my order in at 9.1 points for my limit order to go ahead and buy this call option right here and see if we can get it filled. And there you go. I figured it'd probably get filled pretty easy. So that is that's the trade I picked right there. And again, that strike, it's the 155. So right about there.
Yeah. Now that looks incredibly smart. Definitely excited to watch this one. I'm going to definitely keep an eye on watching it go up. I'm pretty confident he got this one right, and I like the tailwind that it's got, like we talked about, with kind of the direction that AI is going and getting the support from the bigger infrastructure technology companies like Raytheon, and getting a
Yep.
lift there. So this is really exciting stuff. Folks, this is the kind of stuff that you get following Blane, following the programs. If you haven't checked out his weekly profit opportunities yet, it's something that I really think everybody should be taking advantage of. We'll put a link in the email. It gives this kind of analysis on Sundays. If you're able to, jump on a Sunday night and you're tied up during the week and get a trade in and be set to go, really helpful. Linda just dropped a question in here for us. So Linda is asking the expiration date on the RTX, and I think you said October 17th was the strike that you were looking, right? Or
Exactly
the
right. Yeah, it was the
expiration
October
rather.
17th. Yep.
Yeah, so that's the one we're going to be keeping an eye on. So I hope that gets you what you need, Linda, and that this is a trade that you can be part of, and hopefully it's a winner too. So, but Blane, thanks, man, for jumping on. Appreciate the time always. And we're shooting for, as long as we're not working too hard next week, maybe Monday we'll be back on here and see how this trade did.
Yep, absolutely. Yeah, I'll be looking forward to it, and I think we should be able to get together back on Monday. And obviously, like I said, we have pretty big event for the market coming up on Friday with the latest PCE inflation read. I fully anticipate stocks are going to be reacting to that number, whether good or bad. So definitely something for folks to keep their eye on through the back half of the week. And we'll be back here Monday morning to break it all down for you.
Perfect. All right, everyone, have a great week. We'll talk to you soon.
Yep. Thanks so much, John. Take care, everybody.